What do you think investors into Asian markets have to fear from Jackson Hole, Jim?
I don't think a great deal. Jackson Hole, we think, will be about big bank regulation, and that is possibly contesting what the government wants. I think Trump wants the regulators to back off the big banks, but I think the central bankers think it's probably best that they regulate them a bit more closely. I think in the case of Asia, what matters is interest rate direction. We're looking for 25 basis points at the end of the year, but I think markets are already accommodating that.
The US markets have been much more sensitive, it seems, to commentary from Donald Trump. The politics around the debt ceiling is beginning to matter in the US markets context. Can Asian markets disconnect themselves from that trend?
Absolutely, yes, because if you look at the balance sheets of companies in Asia, in the big markets, Japan, Korea and China, these companies have got incredibly strong balance sheets. In Japan, for example, more than 50% of the companies on the top 100 names are sitting on cash. In Korea, companies like Samsung Electronics sitting on cash. And in China, we've done some analysis which suggests that actually the debt situation in China is not the listed companies, it's in the local government vehicles. So actually, interest rates go up, it doesn't mean that much for the financing stress of the big Asian companies.
So overall, you're fairly optimistic then when it comes to the Asian markets overall. Jim, there's been a lot of concern over debt in China. I mean, is it not a concern that some of these state-owned companies are having debt issues?
I think it may be a concern at the macro level, but if you look at the listed companies which investors can participate in, we've done an analysis of the non-financials, so a lot of the industrial names, a lot of the consumer names, and our analysis suggests that these companies, while a lot of them have raised debt through bond issuance in the last few years because money has been very, very cheap, on the whole, the balance sheets are incredibly strong. So for that reason, we don't see a lot of stress at the top level in terms of debt in the case of China, also in the case of Korea, and also in the case of Japan. Some of the markets in Asia that might be affected are the ASEAN geographies where a number of companies have borrowed money in US dollar terms, and that chunk of debt is vulnerable.